In late June 2017, while most of Europe prepared for a quiet summer holiday stretch, a silent digital time bomb was already wired into Ukraine's software ecosystem. It sat hidden inside a routine update for MEDOC, a tax accounting program practically mandatory for businesses operating in the country. Users thought they were installing a compliance patch. Instead, they were loading the opening act of the most destructive cyber attack the world had ever experienced. The compromise wasn't accidental. Attackers infiltrated the software vendor itself, slipping malicious code directly into the update server. A classic supply chain play. Elegant, targeted, and frighteningly effective. Organizations trusted the app, trusted the updates, trusted the process. And that trust became the single point of failure that pulled an entire nation into digital darkness. The morning of June 27th hit Ukraine fast. Offices powered up their workstations, MEDOC auto-updated like always, and within minutes the malware detonated. At first, analysts thought it was another variant of the NotPetya ransomware, but this strain wasn't here to negotiate. It didn't want your Bitcoin. It wanted your infrastructure offline, permanently. As soon as NotPetya infected a machine, it moved with military precision. Leveraging Eternal Blue and Eternal Romance, highly sophisticated Windows exploits originally tied to leaked NSA tools, the malware pivoted across networks at a pace most defenders had never seen before. But this wasn't just a worm. It also deployed credential harvesting with the help of mimicots, weaponizing legitimate admin-level privileges to compromise even fully patched machines. It didn't need vulnerabilities. It stole keys and walked right through the front door. That combination of exploit-based and credential-based propagation made containment nearly impossible. Once inside, NotPetya didn't simply encrypt files, it went after the master boot record, the digital heartbeat of every Windows system. By corrupting the MBR and overwriting file tables, it ensured complete operational wipeout. Even if victims wanted to pay, there was no decryption path, no keys, no restoration logic. The ransom note was pure theater. Ukraine was the epicenter of the blast wave. Government ministries lost access to their internal systems simultaneously. ATMs froze. Retail payment terminals went offline. Power distribution companies lost visibility into critical equipment. The Kyiv metro ticketing system failed. And at Chernobyl, radiation monitoring equipment dropped offline, forcing engineers to revert to manual checks. Hospitals in Kyiv postponed operations. Airport staff wrote departure schedules on whiteboards because flight information systems had gone dark. Dozens of Ukrainian banks experienced catastrophic failure. It wasn't one sector. It was the entire digital backbone of the nation collapsing in real time. And yet, the attack didn't stop at Ukraine's borders. Because it rode through MEDOC's legitimate updates, global enterprises with operations in Ukraine became unintentional carriers. One infected machine in a satellite office was enough to detonate corporate networks across continents. The most dramatic corporate casualty was Maersk, the world's largest shipping conglomerate. One contaminated update in its Odessa office penetrated the company's global backbone within minutes. Terminals from Los Angeles to Rotterdam went dark. Cranes froze mid-load. Containers stacked up in endless rows with no digital record of where they belonged. Maersk employees resorted to pen and paper operations. Truck drivers waited outside fenced terminals for hours, unable to pick up cargo because nobody could verify manifests. By the time the smoke cleared, Maersk's entire network, nearly 50,000 machines, had to be rebuilt from zero. The breakthrough came from a stroke of luck. A single domain controller in a Maersk office in Ghana had been offline due to a power outage at the moment of infection. That lone surviving server became the seed that helped restore operations globally. Without it, Maersk leaders admitted the company might have ceased to function. Pharmaceutical giant Merck faced its own crisis. Systems froze mid-production. Research databases became inaccessible. Vaccine manufacturing lines halted. Some of Merck's most time-critical medicines were delayed for weeks, creating downstream effects across hospitals and distribution partners. Merck later estimated losses nearing $1.4 billion, a staggering number compounded by a years-long legal battle with insurers who tried to invoke act of war exclusions to deny coverage. FedEx's TNT Express division also took a direct hit. With core systems offline, packages piled up in European sorting hubs. Manual processes replaced automated logistics. The company reported hundreds of millions in losses, signaling just how brittle modern supply chains can be under cyber duress. Global conglomerates like Mondelez, Saint-Gobain, Reckitt Benckiser, and dozens more faced similar chaos. Their networks bricked, their financial systems corrupted, their manufacturing lines stalled. The operational shockwaves rolled through every industry sector, from food distribution to industrial engineering to consumer goods. Even Russian enterprises got burned when NotPetya ricocheted back across the internet. Rosneft and Gazprom reported system disruptions, a clear sign that this was not a precision surgical strike, but a reckless release of uncontrolled digital weaponry. As investigators analyzed forensic evidence, a consensus formed quickly. NotPetya wasn't ransomware at all. It was a wiper, a piece of sabotage engineered for destruction, not profit. Paying the ransom did nothing. Victims couldn't contact the attackers. The encryption routine made recovery impossible by design. By early 2018, governments made their assessments public. The United States, the United Kingdom, Australia, Canada, and several European allies formally attributed the attack to Russia's military intelligence agency, the GRU, specifically its Sandworm unit, famously tied to high-impact cyber operations around the world. This was geopolitical cyber warfare masquerading as ransomware. The purpose was destabilization. The blast radius was global, and the collateral damage was unprecedented. The economic impact landed like a meteor. Analysts and government agencies estimated global damages between $10 and $12 billion. NotPetya instantly became the costliest cyber attack in recorded history, dwarfing previous outbreaks and establishing a new ceiling for cyber-driven financial risk. Executives across industries reacted fast. Cybersecurity budgets surged. Zero-trust architecture shifted from conceptual roadmap to mandatory deployment. Multi-factor authentication became non-negotiable. Network segmentation, once a nice-to-have, transformed into a baseline operational control. Boards began treating cyber posture as a corporate governance priority. Cyber expertise became a necessary skill for executive leadership. Risk officers started modeling digital disruption as seriously as physical disasters. On the regulatory front, governments rewrote the rules. New reporting requirements emerged. Critical infrastructure operators faced increased oversight. National cyber strategies were updated and accelerated. Insurers restructured cyber policies to reflect a world where nation-state malware can cripple a multinational within hours. The insurance industry especially emerged from NotPetya with battle scars. Carriers revisited war exclusions, forcing courts to define, for the first time, what constitutes cyber war in a commercial policy context. The ripple effects reshaped how every modern organization negotiates cyber coverage. Yet beyond the regulatory noise and executive postmortems, NotPetya exposed a deeper truth. Digital trust is the foundation of the global economy. And when that trust fails, when a simple software update becomes a weapon, the impact is seismic. Millions of employees across thousands of companies watched their entire digital workflows vanish in seconds. They filled out forms by hand. They wrote container numbers on sticky notes. They operated multi-million-dollar machinery without functioning software. The modern workplace experienced a forced rewind to the 1980s. What NotPetya ultimately revealed is that organizations underestimated their own interdependence. A small software vendor in Ukraine became the ignition point for a global business crisis because every corporate network is interlinked. Every vendor is a gateway, and every update is a potential risk surface. Today, years later, NotPetya stands as the definitive case study in cyber resilience. It's the attack that recalibrated global security priorities, forced enterprises to abandon complacency, and proved that cyber risk isn't theoretical. It's existential. The legacy of NotPetya is simple and unforgiving. Any organization that fails to prioritize cybersecurity is effectively inviting disruption. NotPetya didn't just wipe systems, it wiped illusions. It made one thing clear. In a hyper-connected world, digital resilience isn't optional. It's the future of operational survival. Subscribe to this channel for more videos like this.